Hi everybody, Mike Norman here. Well, it's been a while since I've done one of these videos, but as they say, better late than never. And I wanted to update you on what I see as some very important developments going on, which will factor into the investment outlook for this year, of course, 2010. Some of you may recall that back in August I did a video that's here on YouTube which talked about my outlook for stocks. The question I posed then was it possible for the stock rally to continue? And I think the Dow was in the 9,000 level back then, and I said yes, we would have a continuation of the stock market rally, and I mentioned the factors that I thought were supporting the rally, and one of the most important factors was the ongoing deficit spending by the federal government acting as a support, sustaining aggregate demand and incomes at least at a certain level. And we've seen that play out to the benefit of the stock market, and we've seen the economic data essentially improving since last August. But what I see now for this year really is what may play out to be a reversal of that trend. You know, a lot of focus and attention has come on the deficit, the Tea Parties throughout the United States, this grassroots populist movement which rails against big government and government spending is really sort of having an impact on policy and lawmakers and how the deficit is perceived. It has never been perceived in a positive way, even though there are mountains and mountains of evidence to show that deficit spending does support economic activity, and we always have a stock market boom following periods of high deficit spending. But now the deficit is really seen as something incredibly negative and detrimental for the long-term health of the U.S. economy. Even though that view is terribly misguided, it doesn't matter. Politicians will respond to what is popular. I mean, any good marketer will tell you that. It's better to build a campaign around what is popular and what plays into people's beliefs than to try to change the way they believe. And even the president now, and we will be hearing about this in his upcoming State of the Union speech on January 27th, he will be talking about efforts that he will propose to cut the deficit substantially in 2010. Now, as I said before, just as the deficit supported the economy or helped the economy recover deficit spending from late 2008 through 2009, this return to this sort of fiscal prudence, if you will, and it could be very austere, the proposals that are going to be put forth by President Obama, this will take away that support. You could think of deficit spending as brakes on a car. A lot of deficit spending is like lifting your foot off the brakes, which allows the car to continue on moving or even going faster if you're going downhill. And reduction of deficit spending or moving to surplus, you can think about that as putting your foot on the brakes, which slows down the car, or in this case would slow down the economy. And this is absolutely, if you think about it, the wrong time to be applying the brakes to this economy. We're not growing that much. We have 15 million people, some people say 30 million people who are either underemployed or unemployed. We have our industry that's running at only about 68% of its productive capacity. We have homes that are millions of homes that are unsold. We have millions of vehicles that are unsold. In short, we are living far below our means. And to step on the brakes now is really setting us up for a major turnaround, I think, and I've been bullish since early 2009. This is going to be a major turnaround in the stock market, in the economy, and it is repeating. You know, the amazing thing is we've learned nothing from the past, because this is repeating the same mistakes that were made back in 1937 when FDR's advisors at that time convinced him to balance the budget. We did that, and we went back into what is termed the mini depression 1937 and 1938, the stock market dropped about 40%. So I think that possibility is out there, and it is being driven by a misguided belief system. I've talked a lot about belief systems here on these videos. Beliefs about debt and deficits, which don't apply in the current reality, which is that the United States is on a floating exchange rate, non-convertible currency. We're not on a gold standard. We're not on a fixed exchange rate. So thinking about the money is just wrong. You got to think about the output. You got to think about national income, and you got to think about the people who are engaged in the work, in the employment of producing the goods and services that a society needs. We're not thinking like that. We're thinking about the money, which is really inapplicable in the current reality. So that's it for this video. And unfortunately, and I've had a nice run personally, and I think people who have followed the investment advice, certainly in the stock market, have done well in the last year, but it looks like the run may be coming to an end. Well, that's it for now. I hope you tune back on my next video. Take care. This is Mike Norman. See you soon.